Welcome back on the channel, my friends. So right now, looking at the markets, everything is red. These are the top 15. In the past 7 days, for most of the part, all of them are down. There's a slight recovery here, but it's negligible. It's not even 1% in the top 5. But this is a perfect point in time to start putting your crypto portfolio together. So this video is more of an incentive for you to do that because blue chips are at a discount. That's the way I see it. So this is the perfect time to start building your portfolio. And to be more precise, I mean your yield farming portfolio, because all of this can earn you passive income just by holding. I talk a lot about that in my previous videos. You choose a token pair, you set a range, and you'll earn passive income. You'll earn Bitcoin, you'll earn Ethereum, you'll earn BNB, Solana. If you have $1,000 to spare, split them across these assets or pick one and start yield farming. I like Bitcoin a lot, so I would say if you have $1,000, put some of it in Bitcoin. And you can go with Solana. Solana has high volume, so it's a really good asset to hold for yield farming. The same thing for BNB, although on BNB you can expect a lower yield. But I like Solana and I like Orca on Solana as a DEX to yield farm on. The cool thing about it is that you will have a very user-friendly interface. I'll show you that in a second. And you can yield farm there not only Solana, but also a tokenized version of Bitcoin. CBBTC tends to do really well. You can also yield farm Ethereum there. But if you want to yield farm Ethereum, I think it's best to go on the Ethereum ecosystem. Go on Ethereum, go on Base, some Ethereum layer 2s if you don't want to go on the mainnet, because the mainnet on Ethereum can be quite expensive. Not right now because there's not all that much demand in terms of on-chain activity, but compared with Solana, it's much more expensive to yield farm on Ethereum. That's why I say Solana is the best for beginners. Go on Orca, split your assets across multiple of these blue chips, and then start yielding from those. So you go on Orca. Let me start showing you more precisely what I mean. You just need to connect your wallet, and then you find your liquidity pool tokens. Now, what tokens do you want to yield farm? Whatever token you choose, be it Solana or Bitcoin or Ethereum, I would say always pair them with the stablecoin, because you only get exposed to one volatile asset. That's one point, very important. And the other is likely these will be the pair that drives the most volume, and that is where the money comes from. The yield comes from the volume, people buying and selling Solana and USDC in these pools. So for the past 24 hours, this pool yielded 0.2%, and that's incredible. Traditional finance will never get you this type of results. Now Solana has been going down. I did a video, I think a week ago or a couple of weeks ago, about setting up your yield farming portfolio on Solana. You would set essentially two positions, a wider range and a narrower range. So the wider accounts for market volatility. So when I did that video, the price was at around this, $80, $90. Now with the price going down, that range would still earn you yield, because I believe I set the range to be at 50 or 40 on the downside. I don't recall, but I'll link those videos at the end of this one. So if you're completely new, you can go and watch them and understand a bit better what I'm talking about. Now, if you look at this range, which is a very narrow range, 2%, 4% overall, it will yield you 2% a day. These will not last long, and if you are willing to yield farm, you gotta think in the long term. So don't get greedy and go with a wider range. In the long run, you will see this work. The biggest issue with most people, and beginners especially in this space trying to yield farm or trade or whatever, is that they see price dropping, and this is a substantial drop. So look at this, it went down 25% in the span of less than a week, 4 days. So this is rough, and most people panic and they sell because they're not used to crypto volatility. Now, because Solana is a blue chip, it's unlikely to drop like this in a span of 1 day or less than a day. It took 4 days and it did bounce back 10%. But if you have a wide enough range to account for all of this, there will be times where your portfolio will be worth less, and some other times it will be worth more. It pretty much depends on the market activity and on the price of the assets, of course. But this is why I tell you, start with a blue chip paired with a stablecoin, because if you were yield farming Solana and Bitcoin together, for example, it's a good pair, don't get me wrong. I think both assets are really good, but on those pools, when prices of both assets drop, although you stay in range, your portfolio drops twofold, because the assets, both of the assets, are going down in price. So to get yourself accustomed to crypto, to volatility, all of that, you should stay with the stablecoin pair. And also because these pairs tend to drive really good volume. This is probably the most traded pair transaction wise and even volume wise on the whole Solana ecosystem. It has demand on bear markets, on bull markets. There will always be demand for this pair as long as the blockchain is popular and is active and is drawing people into the ecosystem. So Solana seems to have lost this support. So now, if you haven't started yield farming here and you want to start now, probably you should go with a 30% range. This is one option. But if you are more conservative, of course, go with a wider range. So you see, this is probably not the range that it will last you years, but it will last you months. So when Solana was chopping sideways, and we saw that happening from February up until beginning of this June, Solana just chopped sideways in between a 20% range. So this is a long time accumulating Solana, getting yield, getting even 0.1% a day. This is a really decent yield. Overall, if you go to, let's say 30 days, if you want to yield farm for a month, this would yield you on average over 3% a month, which is crazy. Traditional finance, like I said, it doesn't even come close to that. So if you are a complete beginner, give it a shot. Put some money you are not worried about losing, because things can get rough. Solana can drop further. I don't know how low it will be, but I can tell you, in the beginning of the year, I had a range with the downside at around $40–50. And half a year later, roughly speaking, I didn't need to change that range because I wasn't greedy. So don't go with narrow ranges. This works if you play the game for the long run. So let's go ahead and see how far can Solana even drop? So we see this was back in 2022 at the bottom of the bottom. Solana at some point traded at around $10. Can it go down to $10 once again? I don't know. But even if it does, we're talking about an 80% range on the downside. And this would on average yield you over 1.5% in a month. So that's good stuff still. That's what? Over 15% in a whole span of a year. Again, traditional finance cannot compete with this. And we even have a 30% range on the upside, which accounts for a potential pump up to $85, which was the previous level, right? Now, if you don't have a lot of money to spend, but you still want to give it a shot at this, if you have like, for example, $1,000 and you say, okay, I want to put in $1,000, but I will not risk more than that, then go with $10 on the downside. Anticipate for the worst, you know? The thing is that right now, at this price, $65, you are yielding more Solana right now than you would when the price was at above $100. And the further down the price goes, the more Solana you will yield. As long as you keep compounding back into the pool, you don't have to compound all of your yield. But as long as you keep compounding 50%, for example, or 80%, you will be good in the long run. You will virtually break even. The only way where you will probably not break even right away is when you see these fast drops, because the liquidity drops too much. Yes, you will see that your yield will go a little bit up. Hopefully the price keeps chopping sideways. Maybe it will have a little bounce back. And if that is the case and does something like this, you will see that, okay, I held for the rougher time, and now it's paying off because I have been compounding, and at some point you will break even. For sure you will break even when it pumps a little bit back up. It doesn't need to pump all the way up. It's going to depend how much you compounded back in. But as long as you have a big enough of a cushion on the downside, you should be good. The thing with crypto is that most people are gambling and they don't know what they're holding. So be bullish about the tokens that you are holding. For example, you can go with Bitcoin. Solana tends to have higher yield, yeah, but Bitcoin also has really good yield. And there's some other risks, like for example, counterparty risk. We are holding something that Coinbase ultimately has control over, right? But 0.15% yield in a span of 24 hours. And the markets right now are not even that hot. There's a whole lot of less volume right now than when everyone is excited and when the market is trending and everything is pumping. That is where you see a ton of volume, a ton of activity. For example, something like this, when Bitcoin went back in March, late March and beginning of May, this was a 23% run on the upside. At this point, you will see your portfolio earning you a lot of yield. And the more you compound, the more you grow your position, This is perfect time, actually it's peak time for you to take profits. Even if you need for some reason to sell a percentage of your liquidity pool, you can withdraw, let's say 10% of your liquidity. And by the way, you can do that whenever you want, not only when the market is in your favor, but if for whatever reason you need to use that money in real life, you're free to remove it whenever you want. You're not locked in to a specific price or time frame. Forget about that. You have full control here with crypto. That's why I love yield farming and DeFi so much. And not just because of that, the yield is also really good. But even if you don't want to hold tokens in the long run, these are reliable printers. Bitcoin paired with a stable, Solana paired with a stable. The same thing that I told you about Solana applies for Bitcoin. Will it go lower than 60K? It might. It can go down to what? 20K or even 17, 15K? Like it was in 2022, it can go that route, I don't know. But if you are anticipating for that and you have something like this or 10K, if you are ultra conservative and go 10K or 0, of course this yield will not change your life, but you are accumulating Bitcoin. So we're talking about a triple digits range overall, and this would yield in a matter of a month. Let's see. Like I said, it's not crazy. It's 0.5%, but don't get caught up with this because sometimes you will yield more than this. So the amount of money you have to invest also plays a role. So if you have more, go with a wider range that protects more of your capital so it doesn't get nerve-wracking if the price drops too much. And if you have less, yeah, go with a little bit more risk. Go with a 30-30 or 50-30. I mean 50 on the downside because right now that's how the market is. So something like this, 25, 30, 40K Bitcoin. This would be a very reasonable way to start. And probably you don't want to have 30% exposure on the upside, right? Something like this, 10% or 15%. This would already yield you over 1% in a matter of a month. And you're getting 1%, half of that is paid in Bitcoin. All right, even if you're not bullish about Bitcoin, this is among the most reliable liquidity pools that you can use. It's the assets behind the pools. It's how much activity they bring, how much interest there will be from users to buy and sell those assets. And the reasons why I suggest you using Orca, it's because it has a really good user interface. It's very beginner friendly. You can take a look at the chart, you can take a look at the ranges. It gives you the estimated yield for anything in between minutes, hours, daily, or even monthly or over a year, and also gives you access to these liquidity pools. Bitcoin, Solana, something else. But if you want to start right now, get a hold of into these blue chips. And then what you do with the yield, it's up to you. You can pay yourself, you can open new positions in the same liquidity pool and have something more risky. For example, you can go ahead and use the yield to open a new position, a 5-5 position or a 10-10 that yields you more, and you compound into it. If it goes out of range on the upside, you're at the profit. If it goes on the downside, you're still holding Bitcoin, and you can use your wider range position to continue feeding the fees into a new one. So it pretty much is going to depend on what you're looking for, right? But right now, everything is red. I wouldn't shy away to start yield farming, start deploying a portfolio. Do it with Bitcoin, with Ethereum, BNB, Solana. Yield farm any of these paired with a stable, and you should be good in the long run. Go with the wider range on the downside. If you want to get more risky, start even with a 30-30 range. I would probably tone down a little bit that upside and have 30% on the downside and 15% or 10% on the upside, something like that. If you want to be extra conservative, go all the way down to 10K with Bitcoin or $10 with Solana or even 0. Who knows? All right, guys. So I hope this helped you, some of you, and incentivized some of you to start yield farming now. Start small, test it out, go from there. Just don't drop in your life savings in one go before you get a feel to yield farming and crypto volatility and all of that, all right? So I'm going to wrap this one up, guys. Thank you for watching. Drop a comment if you have any questions. Take care, keep exploring crypto. I'll see you in the next one.